I got a hot trade set up here in the EV market, and this is just on the heels of Congress passing the $1.2 trillion infrastructure deal, which doesn't really have to do too much with infrastructure, but there is some money going into the EV market and more possibility for deals going and pushing towards the green market. Before I let you know what that trade opportunity is, what I'm looking at, why I'm looking at it, my name is Joshua Bellinger of CounterVest, and I want to make money with you. So let's take a look here at what I have. So right here, we're looking at FCEL. And FCEL right here is up on the day, and it's up 20%. And it's looking to be where this is going to possibly go higher. There's two reasons. One, there's a trade setup here that has triggered that's above the 200-day moving average. We've shot through it. And the other one is that we're seeing unusual options activity. Not seeing unusual on the basis of we're seeing direct specific positioning in the options market, betting shares of this goes higher. Now, some of this is going to be where we are seeing this because this activity, because it's a stock, it's a $10 stock, and you're seeing this day trading of options. But what I'm seeing here in the first contracts, the front week here and also next week, looks to be where we're seeing positioning. Overall, option activity is up 200% here. And the trade's going to be pretty simple here, and what we're looking at here, or what I'm seeing here, what has triggered. So when we take a look here at the options market, very quickly here, you had 322,000 calls traded with 59,000 puts. So the calls outpacing puts, and on that we've seen on the day 46% of those traded on the offer. Now, to be fair, I would want to see this much more on the call side. But when you take the in-between, and also in-between is mid-market, and 46% that's traded on the offer here, it's, this is a stock that I would more or less say this is a day trading stock, but I think there is a swing trade here, and we're going to take a look at it. So what I would like to see here, and you could just look at the across the board here, so the contracts that were mainly in focus. So if you want to know what stock is hot for the day, then you just take a look at the front month or the front week expiration here. So what I'm looking at here on the expiration that expires in 25 days is on the call side here, and I'd be looking at something with a 40-ish delta. So it's really at the 12 here. Now, I don't necessarily like to be just a buyer of premium. I'd like to sell something against it as well. I just don't want to be a buyer. So one of the things I want to point out here is that what we're seeing here, and we've seen it a couple different times if you look on the pink line, is that historical volatility, HV, is actually higher than IV, which is implied volatility. And we've seen this kind of come in line here, and we've kind of swap back and forth. And these are the times where you get these big moves, and this is that kind of stock, a FCEL. It's really just news driven on the fact of you get these pullbacks here, and then you kind of get a lift, and then all of a sudden a big move, a pullback, and a big move, kind of in a pullback here. What I'm thinking, what we see here is a continued move higher, and this is not something I would want to stay in. So what possibly could happen here is that if prices do continue to go higher here, we could see IV increase just because the term structure could change a bit just because of the velocity here. The other part of that is that if that's not the case, then you have historical volatility come back in line, which means it's just kind of stagnant here. So that's the two outcomes on there, and that's the reason why I'm a little hesitant, but this is what I would be looking at here. So on a 25-day cycle, or you can even do a 30-day cycle. Let's just look at a 30 here. What I'd be looking at here on this one, you can look at 32 days, and I would be looking on something on a 40 delta here. This is a bit of a wide spread here, but that doesn't really mean much. You got to look at depth of market on this one. Or you can look on the 25-day cycle here and on a 40 delta, which is right around here as well. So this is what I'd be looking for. The trade would be this, a profit of 50% or a exit of 50%. So it's a 1-for-1 here, and we're just looking to follow momentum, or I'm looking to follow momentum here. So we get a pop higher. If I buy this at 90 cents, I'm either stopping out at 45 cents, and that's a 45 cent, 50% loss on that one, or a 50% gain, which is going to be $1.35. So that's what I'd be looking at for this one on trading it. Now, trading the option is going to be a little bit harder because of that. So this is almost more of a swing trade possible, and you can also just possibly just trade the stock if you choose to as well. Trade this on an intraday basis. Not necessarily something I would want to hold that stock for a swing trade, but possibly with the options that we're seeing here, we could see a little bit of a continuation higher here. The other thing too to keep in mind is that plug, which is going to be a sympathy play. Plug has earnings tomorrow. This could go higher or this could go lower, which is going to affect what we're looking at here with FCEL. So this is what's known as a sympathy play, meaning that this could either go higher or pull back because of those plug earnings there. But keep an eye on plug, keep an eye on those earnings, and you could see that pop up. This could be a sympathy play because of that, and then be able to close out that other position for a profit, or it could go the other direction as well and could be a loss. But that's the setup. That's what we're seeing in the options market here, and the positioning, and makes sense why we're seeing that positioning in this week's options and next week's options. So keep an eye on that one.